Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Dhaval Ajmera, Director at Ajmera Realty, joining in. Welcome to the show, Dhaval. And always a pleasure to speak to you and get insights from you. Dhaval, my first question coming to you overall is, have the numbers met your internal expectations, number one? And number two, if you have to compare it to the previous quarters, what does it look like?
Thank you very much, Hiral, for inviting me. Well, yes, as if we look at our company performance for the quarter two and, the half yearly performance, if I have to compare, we are moving on a steady path. And as per our strategy and growth plan for the company for this year, where we wanted to, if you remember last when we spoke, we had said that we are aiming at 1.5 to 1.7x growth this year versus last year. And if I look at that way, we are moving steadily towards that direction. So if I have to compare my half yearly, results versus, half yearly revenue, we have been about a 58% increase in our revenue. So last year we were at about 140, 150 odd crores. This year we are at 230, 240 crores. So we can clearly see the demand coming and the sales have been rising. The revenues have been rising consistently as per our plans. Secondly, and also with that, we are very happy that even our bottom line has given us a good result, and it's been about 121% rise in our bottom line as compared to last half year. So last year half year was about 10 crores. This year we are at about 21 crores. Definitely this has given us a good positive impact to the company, and as a part of our growth strategy and as a part of our plan, it is moving in the right direction. And I am very confident that as we had spoken about 1.5 to 1.7x, I'm confident about surpassing the way our half-yearly results have come so far.
Right. So overall, if we go to see, the operating performance has been pretty strong in terms of, say, the profitability as well, right? Now, if we saw, in between, there was this huge pent-up demand in the real estate space, especially between November, December, January, probably even spilling into the first quarter of FY22. How has the scenario been now? Has the pent-up demand actually stabilized, or has it continued to remain, at the same levels?
So, as you rightly said, that last quarter of last year 20 and first quarter of 21, especially in Bombay and Maharashtra, there was a lot of demand because there was a great incentive by the government in terms of the stamp duty reduction, and people had really taken that benefit to the toll and then actually went and did a lot of transactions then. However, if you go beyond that, and after that, there was a wave of COVID, second wave of COVID, which hit us in that quarter of April to June, which got a little bit of slowdown, and obviously that was a little heavy one. But after that, also what we see is demand has been steady. And what we have observed is, demand for ready construction or ready projects has been, maybe everywhere, wherever there is a ready project, probably there is a good demand. But for developers which are listed, which have got a track record, which have moved and which have shown performance, we have seen and we have observed that even those projects have seen a good demand, even though if it is under construction or even though if it is just launched. So just to give you an example, if I have to look, we have three buckets of projects right now. Maybe one is a ready projects. We have one which are under construction and one which are just about to launch.
Correct.
So if I just have to give you a little that, today, we have stock worth about 200 odd crores in our ready, assets which are ready with occupation certificate. And we are very confident that before this year end, we will be able to, clear that out, and that revenue will be recognized in our books. We have around 750 odd crores of projects or, stock, which is under construction, maybe midway, maybe halfway, just about to finish, or, all those in between line. And there also we are seeing a steady growth and, steady demand coming for sales over there. And just to start taking little bit of, teasers or pre-launches, which we have been speaking, obviously we've not done it. because we are just awaiting the last leg of approvals coming for new projects, which is around 2,000 odd crore worth of revenue, which will come up in the next 4-5 years. So all those, everywhere we are seeing good demand coming from from people and the market. And so that way, under construction also for us is giving us a good support. It's not just ready, but every sector is giving us a good support in all aspects.
How is the price, again, on the cost front as well, due to the way commodity prices have been moving, costs have gone up. So how has the price trend been in the last 6 months?
So price, for us, where we were already, ready stock was there, where the construction was almost been incurred to the cost of tune of 90-95%. We didn't have too much of an impact, but for the under construction, the ones which are, under construction, we are seeing that impact coming. We are, in fact, there may be as I said that, there will be a little bit of we can sustain an incremental cost from the input, but with the way the input cost has been going, and today, if I have to do my projections for new projects, the cost of construction is in the range of 15 to 30%, depending upon the size of the project or the volume of the project. That's the kind of the incremental cost which is going to come. So definitely the prices will have an impact going future. So if I may have probably looked at launching at an X amount, I have to probably look at X plus 15 or 20, because with the way input costs are, we thought that probably this will be a temporary phase, and things will sustainably come down and things will be at a normal pace, but it does not look like, because the prices are going, and every month on month we are seeing the input costs of cement, steel, copper, plastic, everything rising so much that it is becoming difficult to sustain at this level, and costs are going to increase, which eventually will be forced to increase the sales price.
Right. So overall, if I have to look at the value of sales versus the number of units sold, the value of sales has gone on a sequential basis, whereas the number of units sold has gone up. So if I have to take both these metrics, does it actually suggest that it's lower ticket projects which are seeing higher sales versus higher ticket projects? Is that what we can infer from here?
It's not that way. So if I have to give you Mumbai specific per se market today, and for our projects in Wadala, today we are selling at a 5 crore project or a 7 crore apartment also, or a 6 crore apartment also. So, if it is what I believe and I see is, if it's a ready stock and it's a ready building or nearly completion building, in Bombay, 6-7 crore projects, or even beyond that, where in South Bombay, if you see, which are 20 crores and 30 crores and, likes of that, even that is selling. But if I have to look at a larger perspective, let's say for a market like Bangalore or Thane or Hyderabad or all of that, that will be on a cost basis volume, so which is around 4,000-5,000 bracket, which is having the bigger volume and the bigger chunk. So obviously the number of units of a 5,000 will be higher than a number of units of a 50,000 rupees square feet. So definitely there will be a difference like that.
Okay, and overall as well, from the ready to move in inventory is concerned, how much of it is that is lying with us, and how much do we plan to recognize in the current financial year?
So as I said that at the start of the year, we were at somewhere around I think 500 odd crores of 450-500 crores. Today we have about 200 odd crores of revenue stock which is not yet sold, or revenues to be recognized. So this year we are very confident that of that 200 crores we will be able to recognize entirely, because with the kind of sales and the volumes what we are expecting, we should be able to sell off at least 90-95% or even full by this year end, financial year end.
Right. So that is overall with regards to the revenue potential that we're talking about, projects which are ready to move in and advanced staged, right?
Yeah. These are all ready to move in and at advanced stage where occupation certificate is received and we just have to give.
Right. And then if you move to the mid-stage projects, I think when I was going through your presentation, it said that the potential revenue that we could be looking at is around 750 odd crores.
Correct.
So what's that realistic number we should be watching out for as to how much could be recognized from the mid-stage projects?
So from the mid-stage projects, I believe in the range of around 100 odd crores, 75 to 100 crores definitely will come in this year. And then because certain stages are just at the plinth level, or or at the ground stage level, or a second floor level, which probably more impact will come in the second and the third year. But this year we should have between 75 to 100.
And overall, which are the projects that we would be launching from here on? If you have to.
So this year we have 3 projects which we plan to launch. Two in Bombay and one in Pune. The one in Wadala, which we are at a very advanced stages of, the last final stages of permissions, and we should be about to launch over the next few months. And one in Pune, and one in Bombay, in others suburb. So overall, we are seeing a potential revenue from these 3 projects coming to the tune of about 2,000 crores in the next 4 to 5 years time.
Right. And from here on, the way the government actually assisted real estate developers in terms of sales through, wave of stamp duty reduction and stamp duty, what are the steps they should be taking from here on to actually support growth in the real estate infrastructure space?
So my take is very simple. If you entirely look at the the COVID scenario, and you saw the demand and the real estate sector moving, because we have to accept, although real estate is not like a recognized industry, but it directly is a 20 to 30% driver to the economy as such. So even there are about 300 odd industries which are indirectly or directly supported beyond real estate as a flat, which you are an office which we sell, and there are so many other industries which are dependent on that. So I feel with that one push, and it is now been a proven fact that the revenues which the government recognized with a 2% stamp duty was far more higher than what the government recognized when it was a 5% stamp duty a previous year when that was not COVID. And so my thing is that with the kind of input cost being higher, the raw material cost going higher, eventually the overall cost of the flat is becoming expensive. If the government makes the stamp duty at a 2 or a 3% level, it will give a because what I see is that after COVID, there is a lot of demand for real estate. People are buying homes very seriously as an asset class to invest in, and they look as a secured asset class to be there. So if the government gives a support in terms of stamp duty, and if there is an interest rate which right now which is at an all-time low for the home loans, and if that is sustainable, because if I look internationally, interest rates for homes are at 1% and 2%, or even lower than that. I'm not trying to say we should go to that levels, but if today at 5-6%, 6% or 6.5%, we are seeing such great momentum. If this these are the 2 driving forces for a demand in real estate. I personally believe that if we continue to do that, this market will really grow. There will be a good demand in real estate which will support a lot of ancillary industries, where thereby driving the economy even better.
Absolutely, and a lot of things that can be done at this end as well. Thank you, Dhaval, so much for joining us on the show. It's always a pleasure to speak to you, get insights. Thank you, stay safe, and speak to you soon again.
Thank you very much. Take care.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.